Hello, welcome back uh, to my YouTube forex trading video once again. Today is the 3rd of November 2021. Pardon me for putting on my hood this way because it's a little bit cold now. It's getting cold here, and I guess that's one way I can cope. Don't be offended by that. I'm not trying to make any statement. Well, like I newly started making videos about my trading because one thing I like to do is I want to teach people what I'm sure about. I'm not going to come here and tell you blah blah blah. Forex is that's a money making machine. Once you get on the floor, once you have a computer and you know a few things, you can just start making money right away. I'm not gonna come here to say that because that is not true. So I'm making these videos now that I believe consistently I have shown I have shown that I can actually make money, trading forex. And so that's why I'm making this video to educate my followers. And please, you know, don't forget to like and share this video, on whatever platform you are on. It's just for the purpose of education, nothing mega, nothing major, because I don't really care. I don't make money from making YouTube video because that's not the purpose. The purpose is just to educate people that follow me. So I hope you join the leading group. So hit that like button and share and even subscribe to my channel. Once again, my name is Olajide. So today I actually will be showing us um, one of the very effective ways that I've learned to use the Fibonacci retracement indicator. Yeah, for a start, the Fibonacci retracement indicator is part of the Fibonacci group because there's Fibonacci retracement, there's Fibonacci expansion, there's Fibonacci arc. All of these tools are very efficient tools in the hands of traders who know what they're doing to actually find entries, exits, stop losses, and targets. So that's the use of the Fibonacci group. But today I'm only going to be dealing with the popular one, which is the Fibonacci retracement indicator. And whatever platform you are, whether it's Meta 4, whether it's Meta 5, whether it's Trading View, like I always, want to mention the Ninja Trader, the C Trader, and whatever platform it is, all of these charting platforms actually will provide you with these basic indicators, and they are very, very useful. I kid you not on that. They're very useful, uh, you know, very useful tools. So today I'm going to be showing you how I make use of it. I make use of it in two ways. I make use of it when I want to know the actual uh, that zone, that region that the markets will get to, and then will start to retrace. And for two purposes, because the bottom line here is it is the retracement tool that you are using. Fibonacci retracement. That is what it's called. Fibonacci retracement. I could help a few people here who may not be very familiar with that too. So I'm just going to write it out quickly so you can see uh, what it is of what exactly I'm talking about. Fibonacci retracement, retracement, Fibonacci retracement. Okay, so here you go. Here it is. Yeah, trying to move it so you can see it a lot better. I'm sure you see it now. So it's the Fibonacci retracement tool. And what it does is that you know how the market is, for those of us who know what the forex market is all about. The forex market either is making uh, lower highs or lower lows. So when the market is trending downwards, it will be making two forms of downward trend. It will go lower low and sometimes come back lower high and get back lower low and come back lower high and get back lower low. That's how the market always plays out. It is never a one, it is never a straight line. Never. It is always zig, zag, zig, zag. You know, zig, ziggy, zaga, zaga. You know what I'm saying? Yeah. So that's for the downward trend. But when it's making an upward trend, it is also going to repeat the same vibe, the same rhythm, like upper highs and upper lows. It goes again upper high and comes down again upper lows. Still an upward trend. Yeah, it is still an upward trend, but because it is not a static market, it's a dynamic market, always making movements. It's neither here nor there. So you got to be familiar with that. So a lot of times it is good to make you or to make do with the times. Even though it's an upward trend, it could crash down. So when it comes down and makes an upper low, you as a trader want to determine at exact point will it get to, or what region will it fall to downward at the upper trend before it starts to go back again. Actually, it's an upward trend, but it's going to come down to a region, and then when it gets to that region, the market, the forces of demand and supply will push it upward again to continue the upward trend. So you want to use a tool to help you figure out what is that region where it is going to fall to and then move back up. What is that region where it is going to rise up to and then move back down? So that's why the tool or the indicator called Fibonacci retracement is a veritable tool in the hands of any professional trader. Even amateur traders can make do with it. Yeah, they can actually make do with it. It's a simple tool. You just have to understand how it is being used. So today I'm going to show us how I use the Fibonacci retracement tool. So like I said, I use it to actually know at what region does it get before it comes back. So sometimes I will use it to know, to determine my entry price to get into the market, and sometimes I will use it to know when exactly I should get out of the market. Like for instance, if you look at my screen today, I'm actually trading the Aussie dollar US dollar currency pair on a 1 hour chart. It's on a 1 hour chart because I usually would start my analysis from the daily chart and then go to the 1 hour chart and see what it looks like on the 15-minute chart, because I would call myself, I won't really say I'm a swing trader. I'll probably say I'm an intraday trader. I'm just at the middle of it. It's not like I'm super extremes on the swing side or super extreme on the scalping side. I won't say I'm really a scalper because I don't really be working on 5 minutes and 1 minute. Because those who scalp will actually want to scalp using the 5 minute chart or the 1 minute chart. But because I use the minimum I use is the 15-minute chart. So I'm not going to say I'm a scalper. I would rather call myself, maybe an intraday trader. So yeah, like I was saying, this is my chart. If you look at this, I actually was looking, at taking a little profit from this Aussie dollar, US dollar currency pair. So the market actually, came all the way from this point and started to make lower highs and lower lows, 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 lower highs and lower lows until it got to this point, and then it shot back up and made a lower low. So it is actually a downward trend, and even when you check it from the daily charts, you can see right here it is actually making a downward move. So I know it's going back up, so it is still gonna go back up in the long run, but I just want to take a few pips out of it before eventually goes way back up. So now what I'm looking at is that it is making a lower. It is definitely gonna make a lower low and then go back up. So because it is an upward trend, I actually want to trade it. I want to trade the trend. The trend right now, at least in the short term, is an upward trend because you can see it made a lower low at this point and then starts to go back up. It definitely is going back up and probably will get to this point where I have the line, or could even go beyond this line and come to this point, and could even go beyond this point and come. It depends on what time of the market you get in. Right now, it is still under this line, and I want to actually use the Fibonacci tool to know how far will it go right now downward and then start to make, sorry, I actually want to see how far up will it go, because right now it is moving up for sure, but I want to be sure. I want to take my profit at the exact point when it starts, that it will get to and then start to fall back downwards again. So that's what I'm trying to do now, and because of that, I'm going to be using the Fibonacci retracement tool to find that target profit region. What did I say? Target profit region. That's what I want to use the Fibonacci tool to achieve on this trade. I could use the Fibonacci tool to also determine at what price do I get into the market. But on this particular currency pair, I'm not doing that. What I'm doing is to know the how far the market goes for me to get out of it and make the money I want to make, and be done with that particular currency pair. So that's the purpose right now, and that's why we're gonna go into. You see my cursor. I'm gonna move it to this point. You could actually get your Fibonacci retracement from here, or you go to your. This is I'm actually trading on the Metaphor chart platform. This is the Metaphor chart platform. So you could actually go to Insert, and you see the Fibonacci. So this is a group. You can see what I was saying the other time: Fibonacci retracement, Fibonacci time zones, fan, arcs, and expansion. So today we're dealing with the what? With the retracement. You can click on it, and then since the purpose of this trading is to know how far back down, sorry, the purpose of this trading, yeah, is to know how far up it gets before it begins to uh, go downwards. So, and that's why I'm going to pick, I'm going to start, I'm going to draw my Fibonacci from here and bring it down, and to the last spike. You see the spike underneath. You see, that's the last part, or that's the last spike that was made before it started to go back up. So you see where I started from. I drew it from the point when the market started to make lower lows, sorry, upper lows. So from this point, this is the area of importance for me. I wouldn't start from here because I sometimes make use of the time period, because if you look at this, let's draw our cursor. Whatever you call it, the cross cursor. So here the date shows 29th, and that's far back as last Friday or thereabout. I want to be sure. I think I'm sure about that. So I think the market already went past that area. So it will be a waste of time trying to use that data of last Friday, for the little time you want to spend, in the market. So I would rather go for a more recent market activity. And the most recent market activity for this week is Monday, which is 1st of November 2021. So that's why you see I picked my Fibonacci and started to draw from here and got to this point, which is the lowest low it has made currently. And then so you see why I made that decision, why I did not draw Fibonacci from here. So I started from here. All right. So you can see there are three significant percentages on the Fibonacci retracement. So you have the 38.2%, you also have the 50%, and then you have the 61.8%. There are other areas of concern on the Fibonacci retracement, but I do not really care about those other areas. These three have been tested and trusted for that the market respect those zones. Yeah, the market will respect 38.2 sometimes. It will get to 38.2 and then it goes back down. So, but most times, more times than never or than ever, whichever one it is, 50% and 61.8% are crucial, very crucial on the Fibonacci retracement indicator. And that's why for my own trading plan, I won't do nothing with 38.2. The reason is because a lot of times it will get to 38.2, come down and go back again. Within 10, 15, 20 minutes, it goes back up again. And then if you use that as your decision making factor, it's going to eventually stop you out of your trade. It's going to take out your stop loss. So I would prefer to wait. Remember the last video I made? You can check that video out on YouTube, on my page. You see, patience is a virtue in trading. So I would wait. Most times wait, till it gets to 50. And even when it gets to 50, if it's a decision, if my decision is to enter a trade at 50%, I will still wait to see how far it makes those dynamic movement going up and down, because sometimes it will leave 50 and still come to 61.8. And if you enter at 50 and make 61.8 your stop loss, by the time it starts to make those zigzag movements, it will eat your stop loss. So why don't you chill? Fine. You only worry yourself when it gets to 50%, but don't enter the market. You could exit the market at that moment if what you're doing is if your target is to get a target profit, like I want to show us today. But I'm talking about making, a decision to enter the market. So at that point, you might want to wait for the market to continue the movement it makes, and it will eventually be exhausted. It usually gets exhausted when it gets to 61.8 and beyond. So wait and let it come back. Watch out for the double bottoms. The double bottom candle, when it's a downward trend, you're going to see two candles. One will be upward, and the second one about the same length of candlestick will be a downward trend. So we call it double bottom. Like this is a double bottom. You see this? This is a double bottom. This green and red. This is double bottom. You see, when it formed this second red candle, it crashed down. So that's a point that's what you can use as your decision making tool to enter into a trade. So when you see things like that, it means the market is about to retrace, either back down or back up. So yeah, so I'm going to make the video very short. Just want to give you a little bit of explanation on that. So, but for the purpose of this particular video, I'm only doing this for us to see how I take profit with the retracement, with the Fibonacci retracement tool. So I entered the trade on AUD USD at price at 74529, about this region. It was about this region. Okay, yeah, this is it. This is the region I entered. You see these green dotted lines? Yeah, that's what the region I entered. And then I put my stop loss on. I put my stop loss at 74118. You must always don't trade without a stop loss, else you're gonna mess yourself up in a very short time. So because if the market goes against you, all you lose is whatever you're willing to lose. Like me, I don't care. I have quite an appreciable amount of dollars. It is a live account. This is no demo. So this is a live account, and I think I have quite some money here, so I can take some risk. It doesn't really matter. I don't have to win all the time. And that's one thing you have to prepare yourself. Prepare yourself for losses. You could make losses. Only that, make sure your losses are way, way smaller than your wins. That's how you make money in forex market or indices or cryptos or metals. Yeah. So right here, this is my stop loss, and I'm just waiting. So I'm already riding the trend. So I'm riding on the trend because I know the trend is going up. And so where you see my Fibonacci, so you see 50%, 61.8%, and 38. I'm not going to take profit at 38.2 because I know definitely it is going beyond 38.2%. So the minimum target profit I'm taking is on the 50%. And you see the 50% region, the price on that level is 7473. If you do your plus and minus and you want to see how many pips you're gonna make from the time I enter the trade, and if it moves to this point, I would have about 19 pips. I would have about 19 pips at that time, and depending on what lot size you use, you could make some good money. Yeah. So if the market eventually moves as far as 50%, I already put my target profit there. It is going to what? It is going to take profit, and boom, I'm done. I'm done with that particular trade, and then move forward to look for other trading, other trades. So yeah, so that's what I just wanted to show us today on how I use the Fibonacci. So once again, for a recap, Fibonacci retracement can be used to determine your entry price, and it can also be used to determine your target profit. And it could also be used to determine your stop loss, because Fibonacci retracement actually is a sophisticated tool that is a pattern towards support and resistance zone, support and resistance. If you are a trader, you cannot but understand the theory of support and resistance. It is very key for your success. So I hope you find the video useful. Don't forget, to comment, like, share, and subscribe. I'll see you shortly. Have a good day.